Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I want to wish you and your family a happy new year. Hope your celebrations were really fun. And if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee, which today is from Onyx Coffee Roasters from Costa Rica to be exact. That being said, in today's episode, I'm talking about Cardano's 2022 roadmap and outlook, a couple underrated altcoin projects, our usual 404 Logic Not Found segment, and more, so make sure you stick around for all the updates. Now, if you like crypto, please do subscribe to the channel, hit the bell notification button, or follow the podcast on your platform of choice so you can get a heads up whenever I post new episodes of the show Crypto Over Coffee. Just a friendly reminder as well, which I have to do every week unfortunately, please be aware of scammers that are in the comments on the YouTube channel posing as me and other crypto YouTubers. They're also all over social media pretending to be me. So I don't have a WhatsApp, I don't do outreach on Telegram or social media. So if the comment on YouTube doesn't have the name highlighted like you see here or doesn't have the check, it isn't me. You can report them. So please be safe out there, folks, and avoid these scams. Every week, I do give away a Keystone tablet steel seed phrase backup device by picking a random YouTube comment. So all you have to do to enter the draw is leave a comment on the YouTube video. And the winner of last week's giveaway is here on the screen. So congratulations, and I will be in touch. Now, you may hear from researchers, from influencers, and other notable people in the space who like to post their opinions online that Cardano is dead, or it has nothing has nothing going for it, or it's terrible. But that really couldn't be further from the truth. At the tail end of 2021, both in numerous blog posts and video updates from Charles Hoskinson himself, the plan for Cardano in 2022 has largely been revealed. The most interesting area is, of course, in what significant features or upgrades are coming to Cardano in this 2022. Two of those are of particular note that I want to talk about here. The first one is Hydra, the layer 2 scaling solution for Cardano, and the P2P or peer-to-peer network upgrade that will remove one of the last elements of potential centralization from the network. So let's talk about Hydra first, which is the name of Cardano's layer 2 state channel scaling solution, and that's going to allow Cardano to achieve transaction per second performance well beyond any realistic load it's going to face from decentralized applications at scale. The name Hydra is a metaphor for the way that the solution works, which basically is spawning new state channels that process transactions and the resulting logic to manage high volumes of transactions in parallel, much like the multiplying heads of the mythical Hydra from folklore. You get the idea. For Cardano, Hydra has been in the periphery as smart contracts took priority, but its timeline has since appeared to accelerate according to GitHub activity and updates from the team that I've been seeing. So at this point, it seems likely that Hydra makes its way into testnet and maybe even a full-scale release in 2022, which is surprising and exciting. Now, P2P might sound like an update that's insignificant compared to Hydra, but it's really important. If you think about how Cardano functions as a network today with the Ouroboros consensus mechanism, you have many different independently run stake pools that contribute to block-making duties on the network and communicate with one another to propagate information about transactions, blocks, etc. And this process of data diffusion and decision-making of the protocol has to be efficient and fast to prevent impact to the core processes of the network in terms of speed. Therefore, a naive solution cannot be put into place long-term. So instead of relying on static configurations, lookup files, and IOG infrastructure in a federated environment, the Cardano network must be run entirely peer-to-peer, where nodes find and communicate with one another directly. So this P2P protocol is now nearing completion and it's being tested in a semi-public testnet with some select stake pool operators, but this is pretty much looking to be the priority for 2022 to shut down all reliance on IOG, IOHK infrastructure for networking in collaboration with stake pool operators. Other technical changes, though, that will come in 22 are new and improved NFT metadata standards, human readable asset identifiers, an optimized web wallet for use with dApps on Cardano, much needed, and the release of the Plutus application backend, or PAB, which encapsulates much needed tooling for developers to build dApps on Cardano. In addition, Charles Hoskinson has laid out plans to facilitate entire end-to-end financial transactions and processes on Cardano in 2022 as part of efforts in Africa, for example, finally putting together all the pieces that have been deployed over the last couple years. Of course, this effort will be complemented by the long-awaited launch of a larger volume of decentralized applications deploying on Cardano, and likely the advent of DeFi is going to be what really brings the house home. So Cardano has been looking at DeFi for a long time, and there's a bunch of new paradigms that developers need to build upon. So the approach has mimicked IOHK and IOG's own approach in developing Cardano. Slow, research-based, well-tested, so that you have a predictable launch. And one of the most hotly anticipated DEXs who has followed that process is SundaeSwap, having just completed their audit. They're looking like they're about to near launch, and that's going to throw things into high gear. And several other dApps have implemented their concurrency solutions, and some even have smart contracts running on mainnet, accepting relatively significant transaction load. Other utilities like ADA Handle as well have had soft launches, and critical tooling like the browser-based Nami wallet have provided a much-needed mechanism for dApp interactions on Cardano. So the primitives are there, the building has been going, there's a lot of work yet to do, but honestly, at the protocol level and developers building atop Cardano, work has been ongoing. Those of you who were involved in the early days of Ethereum will also probably remember that it took a lot of time for meaningful applications to spring forth on Ethereum, and longer still to eke out the best practices and design patterns that led to composability and the explosion of DeFi and NFTs and other platforms therein. Yes, times are different, expectations are higher, but Cardano's entire smart contract execution environment is wildly different than anything else that exists out there right now, which means that the path to maturity is an unbeaten path. And my conviction is relatively unshaken that Cardano will contend for significant dApp volume and adoption, not only in 2022, but in the years to come. So if you're a Cardano fan, I still believe that the best is yet to come. Real-world financial transactions, DeFi, scaling with Hydra, and improvements to tooling and protocol layers for Cardano will likely catalyze the next phase of growth in the coming years. Now, obviously, I can't hit everything that's going to come to Cardano in 2022 in just a segment, but this is what I've been able to pull together and the highlights of the updates I've been reading and watching. So our usual crypto market update is up next, which features more of the roller coaster-like price action for much of the crypto market that we've been seeing for a while. We've got Bitcoin still below 50K at around 47,000 at the time of recording. We have Ether below 4,000 at 3,700, and most altcoins are feeling the effects of sell pressure at the end of 2021 and into 2022. However, many believe that the tax loss harvesting, wash sales, and institutional rebalancing may be over now going into the first week of January, but I'm not 100% sure I agree with that. Because I will say, if you look at the exchange activities, there's still a fair bit of inflow going on, which doesn't always mean selling's going to happen, but it can lead there. So I wouldn't be betting on large-scale moves up in crypto until we see a flip in inflows to outflows on exchanges and some steady buying going on for a more extended period of time than like a day or two. While it's impossible to predict the market, I would still feel pretty confident to say that we are one big sell-off away from clearing the brunt of this negative price action. But what do you think? Do you think we're going to see new all-time highs in 2022, or are we just stalling out for a long bear market? Now, this next project that I want to talk about here outside, I mentioned some altcoin projects at the beginning, is one that was just recently brought to my attention by one of the awesome peeps who watches the show. So big shout out to you, Funk, as you know who you are. Hopefully you're watching. Thank you very much for showing this to me. Now, as soon as I read about this project, I had that nervous energy, that jittery feeling that I get when I really resonate with the team's vision. And Composable Finance really hit that exact mark for me. So Composable Finance is building a unified and widely accessible access point for the world of DeFi across the many layer 1 and layer 2 networks that exist in the world of cryptocurrency. This unified interface that seeks to defragment the world of DeFi is dubbed the Innovation Availability Layer, or IAL, And that will be the core component of the Picasso parachain on Kusama and Polkadot that Composable Finance is seeking to bring to the fore. As you know, the central operating force in DeFi is smart contracts, or code executed in the context of a blockchain network. So Composable has also outlined their core Composable Cross-Chain Virtual Machine, or XCVM, that will bring an abstraction layer for developers to build DeFi services that span multiple layer 2 and layer 1 networks and the smart contract functionality therein. The mosaic component of Composable is what provides asset transference capabilities across layer 1 and layer 2, including Ethereum, Avalanche, Fantom, Polkadot, Kusama, and in the future, there was mention of Cosmos and some others. With Mosaic, the core routing layer in Composable's toolset can find the optimal path for a user's desired DeFi operation across those multiple networks that are available. On this platform, developers can build the DeFi products of the future with the full power of composability at their disposal. I mean, it's the very name behind Composable Finance. The whole platform is designed to unlock the maximum power of composability, which is pretty much the superpower of modern blockchain applications. You get the idea. Composable is a one-stop shop for DeFi across the entire crypto ecosystem, which is quite literally the definition of my ideal vision for the future in this space. So I really like what Composable is building. And I also want to stay in the Polkadot space for another second and talk about Efinity, which is one of my favorite projects. That's the latest addition to one of my favorite ecosystems in the entire crypto space. So Efinity is a parachain project purpose-built for the world of NFTs, featuring high transaction throughput, low fees, and a plethora of features designed to extract the maximum value and usability out of NFTs. Efinity itself is designed to serve as an interoperable hub for NFTs across the entire crypto universe, with the paratoken standard they've built being compatible with existing ERC 721, 1155, 20, etc. token standards from Ethereum. And then the general interoperability offered by Polkadot will connect Efinity to the whole world of crypto. So a huge congratulations is in order as well, because Efinity just won the 6th parachain slot in the formal Polkadot parachain auctions, which means that Efinity will go live as a parachain around March 11th of 2022. As a longtime supporter of the engine ecosystem, I am ecstatic for this, and I truly believe that Efinity is going to be the go-to spot for NFTs in the future, finally unifying what is right now a very fragmented area of crypto still. So stay tuned and get subscribed, because I'm going to have a deep dive on Efinity and what makes it special coming to the channel very, very shortly. Now it's time for Rational Reactions, a somewhat new segment on the show where I read headlines from tech and crypto related publications and give you my instant, hopefully rational reaction. So let's switch over to the computer and get started. All right, very first story of the day is from Cointelegraph. Polygon upgrade quietly fixes bug that puts 24 billion of Matic at risk. Considering how much was at stake, I believe our team has made the best decisions possible given the circumstances, said Polygon co-founder Janti Kanani. And I hope I pronounced that name correctly. My apologies if I didn't. People are getting mad about this because they're saying, oh, there was no disclosure of the bug. I completely disagree with that. This is following the best approach possible. Yeah, it's unfortunate there was a bug. Yes, people can raise their eyebrows at the fact that there was this bad of a bug that went unnoticed until now. But this is the only way to do this. When a white hat hacker finds something like this, you don't publish it before you fixed it, because then it's going to be a target for exploit, right? So this makes perfect sense. The way that this was handled, in my opinion, was perfectly fine. Yes, it's scary. That's a lot of Matic that was at risk. The bug got fixed. That's why you have white hat hackers and you have processes in place to do this. Same thing happened with Geth or Go Ethereum not that long ago, actually. So this is perfectly fine. Next story is on Cointelegraph as well. Just 1.3 million Bitcoin left circulating on crypto exchanges. 6.3% of total Bitcoin supplies left on exchange wallets, according to new analysis by CryptoRank. This is also no surprise. And I know this was about a week ago, and I'm sure there have been inflows to exchanges since then. But 1.3 million Bitcoin, if you think about the grand scheme of things, and you think about how much Bitcoin MicroStrategy is buying, for example, there's really not all that much that's left over for retail to buy on exchange. And I know this can change on a dime, but this is really just more proof about the scarcity of Bitcoin. And over time, as halvings continue, there's going to be less Bitcoin being released into circulation to miners who will then have to sell, or maybe have to sell into the exchange ecosystem to be bought by others. You start to see that flywheel getting created around the scarcity of Bitcoin. This is kind of in the same vein, actually, but you have a CoinDesk story about Grayscale Capital holding 43 billion in crypto assets under management, or AUM, down from nearly 61 billion in early November. So you've seen their total assets under management go down a fairly significant amount, 30%, I think. Yeah, it says 30% and 22%. Oh, it's split between Bitcoin and the Ethereum trust. So again, this is really just indicative of what we've been seeing in the markets lately. Sell off, and then whenever there's a slight bump in price, you see another sell off again. This is really kind of an example of, since November, throughout the month of December, institutions and more sophisticated investment arms making moves like this. You see assets under management declining. I have a feeling in this new year, and one would hope throughout the year, we're going to see those assets under management climb again, like we did see throughout the year in 2021. Grayscale's assets under management grew a ton across from 2020 to 2021. So we'll see what happens. But again, this is really a good example of what's been going on in the markets recently. Oscar-winning rapper Eminem purchased Bored Ape Yacht Club NFT for $462,000 US. Celebrated entertainer made the dazed-looking ape, who is outfitted in military-style cap and hip-hop clothing, his Twitter profile picture. All I have to say is, yeah, it's cool. It's great. Eminem, cool, great music. We get it. Let's just hope this is not being stored in a hot wallet in MetaMask. Please, please. I can't handle another Bored Ape theft, because you have someone coming into crypto brand new. You know, everyone's like, yeah, crypto, it's great. This person just bought an NFT, and then it gets stolen. And it's like, oh, well, that sucks. So hopefully this is being stored. Not calling out Eminem at all. I just really hope he's got somebody there to tell him how to store this stuff properly. He's got a hardware wallet. He knows to check, to sign, not to sign transactions he doesn't recognize, staying away from phishing sites, the whole shebang. Really hope that's the case. Here's another one from CoinDesk. What Jack Dorsey's beef with Web3 is really about. The Bitcoin-loving CEO's feud with VCs is just the latest round of a fight that has been raging for nearly a decade. Bitcoiners versus crypto. Okay. Here's the deal. Bitcoin is a crypto. Crypto encapsulates Bitcoin. Web3 also encapsulates Bitcoin. We're talking about terminology here. Yes, there are venture capitalists, projects, or backed projects in the crypto space that label themselves as Web3 when they're really not. But here's the deal. Why do we have to be fighting about stupid stuff like this? If you believe Bitcoin is the future, it's the only future, build your stuff and stop talking about it. If you really believe that's the case and you have conviction, why do we need to be fighting about it? Same goes in the other direction as well. There doesn't need to be this ideological battle. Build the products. If the people come and people listen, people resonate, it was meant to be. So what's the big issue? I don't understand the fighting about this stuff. It really makes no sense. All right. And then the last story is about sushi. And you guys will know I'm a fan of sushi. I bought in a pretty big time this year. It hasn't worked out as I thought it was going to, because there were a lot of things that overshadowed the upgrades and things that were going on. There was some drama behind the scenes. So the headline reads, Sushi tries to pick up the pieces, a DeFi governance case study. The popular AMM is pushing ambitious governance overhaul after months of infighting. What's next? This article is actually a really interesting read, so you should actually read the whole piece. I know I'm reacting to headlines here, but the reality is that this is going to be a retrospective case study on the shift and adjustments that have to be made that are easier to do if you're in a centralized company where you can just overhaul the whole thing. This is a decentralized community, a DAO, and there's a lot of stuff that's been shifting around leadership-wise at Sushi. And while the work that's been done has been great, the execution has not been there. The execution, that final step, has not been there. So it'll be really interesting to see what happens if Sushi turns this around, if this ecosystem kind of has that resurgence that I've thought it was going to have. And I think it'll be really cool. So I really like pieces like this. So well done to the author, really going and analyzing this, because this is a pretty notable event in crypto history. So that, my friends, is Rational Reactions. Let's move on to 404 Logic Not Found. And that being said, ladies and gentlemen, it is time for 404 Logic Not Found. And for those of you who are as of yet uninitiated, in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. Speaking of attention, if you want to help this episode of Crypto Over Coffee get some attention from the algorithm robots who really run the show here, please do hit the like button. get subscribed on YouTube, or you can follow the podcast. Heck, you can even share it with a friend because it tells the robots that you're enjoying the content and others might also enjoy it. So thank you for that in advance, and a coffee cheers to Costa Rica, Las Lajas from Onyx Coffee. Now, it's another week and another story of hundreds of thousands or even millions of dollars worth of expensive NFTs stolen from a user storing NFTs in hot wallets, following poor Opsec practices and or not checking transactions that are being signed. This week, an art gallery operator was taken for $2.28 million worth of NFTs, including Bored Apes, in the mix after reportedly clicking a phishing site link, which managed to somehow extract the NFTs from this hot wallet, which I can only assume was a MetaMask wallet. Now, I'm not calling out this person's name because the point of this is not to shame this single person at all. Actually, please do not do that. It sucks to be in this position. But I have to call out the pure insanity of this pattern of behavior in the NFT space in particular. If you have millions of dollars in NFTs, heck, you even have thousands, you have absolutely no business using a hot wallet like MetaMask for it. It is bonkers. Holding valuable NFTs in a hot wallet like MetaMask is like owning an art gallery, locking it up at night, arming the alarm, and then leaving the key and the alarm code in the fern outside the front door. You are literally begging to end up like the Isabella Stewart Gardner Museum. In other words, with empty frames where your previous precious Bored Apes used to be, and figuratively, of course. At minimum, one needs to have a hardware wallet linked up to their MetaMask to set the bar just that much higher in terms of private key security and signing security. But even then, you can get taken advantage of and lose everything if you're not paying attention to what you're signing with that hardware wallet as well. You have to do your checks on any site asking for a signature or asking for information from you. Never click on links, ever. Just don't do it. Just don't do it. And when you're signing a transaction on literally any web interface, whether you know it and you have used it before or not, you have to check the contract address and contents of the transaction that you're signing. These are just basic OPSEC practices for protecting yourself in crypto, and they're non-negotiable. And there's a reason this keeps happening. It's because people are skipping straight to the part where they accumulate a portfolio before understanding the very basics of safely storing and managing those assets. So let me make this very clear. Anyone who holds any significant amount of money in digital assets that isn't using a hardware wallet does not understand what they're doing. And if you don't understand basic OPSEC practices, or you're not checking before signing transactions, it is a very clear 404 logic not found. So there are so many resources that you can use to learn this that can prevent these types of losses that we're seeing every week. And I will personally help you if you need it. So let me know. All right, folks, it is sponsor time, which helps keep the show coming to you every week and keeps my coffee cup full. First off, I want to thank the long-term sponsor of Crypto Over Coffee, which is Ledn, who offer a user-friendly and powerful savings product that it lets one earn yield on their Bitcoin and USDC. For long-term holders, this is a great way to build upon one's holdings with compounding interest and even take advantage of fiat currency loans against one's Bitcoin that you hold on Ledn if you were to need that. So you can think of Ledn as a hub for financial products centered around Bitcoin. If you sign up through my link below, you can earn $10 in USDC for a qualifying deposit to Ledn. I would also like to thank the other sponsor of the show today, Spiritswap, which is one of the top DEXs and a really, really powerful product on the DeFi powerhouse Fantom. And Spiritswap, very basic sense, provides an automated market maker or AMM platform built on the highly scalable Fantom Opera network, which we've done deep dives on the channel about in the past. Basically, Spiritswap allows users to quickly and cost-effectively swap a wide variety of tokens, both native to Fantom and those bridged from other blockchains via Spiritswap's inbuilt bridge. Currently supports things like Avalanche, Polygon, Ethereum, BSC, and Arbitrum, with more chains to be added in 2022, mind you. Spiritswap offers the features that DeFi users have become accustomed to, that they know and love, letting one contribute pairs of tokens as liquidity to liquidity pools, participate in yield farming, and participating in governance via the native Spirit token. For boosted rewards in governance, one can lock up the Spirit token in return for in Spirit, which can then be used to boost farms yield automatically via boosted farms. And of course, that lets you control the emissions or incentive output to any boosted farm via a voting process that is built into Spiritswap. For more info on that boost process, I'll leave a link to a great Medium post as well in the description. In the first half of 2022 alone, Spiritswap has a lot of stuff in store to double down on the success it had in 2021. Firstly, Spiritswap will be introducing something called ecosystem farms, which will offer even more incentives to users who provide liquidity on Spiritswap, which, as you know, is the lifeblood of any DeFi protocol. Liquidity is king. The crux of this strategy is to have partner protocols like Olympus, like G-Ohm, for example, to provide additional rewards for liquidity provisioning, letting those who bring liquidity to the table capture additional value from the platform. Furthermore, Spiritswap is completely overhauling the DEX interface and architecture that underlies it to improve performance, user experience, and more. So Spiritswap V2, as I guess you could call it, will be optimized for continued growth in 2022, including some cool new features like rewarding users for casting their votes via in-spirit for boosted farms, like we talked about before. Spiritswap will also be bringing interesting new features like deploying decentralized leverage trading, which will be the first of its kind on the Fantom network, to my knowledge, giving users the ability to long assets with pretty much a single click. Now, I also want to note that Spiritswap is working to move to a full-on DAO structure in totality in the first quarter of 2022, letting in-spirit holders take full control over the development and direction of the protocol. This effectively means that the current Spiritswap team will become a development and implementation partner or entity, and decision-making is handed over to the in-spirit holders altogether. So the first community snapshot proposal will be held on the 3rd of January. So please remember, across the whole board here, across the whole show, there are risks abound in crypto and DeFi, including but not limited to losses in the markets, impermanent loss if you're doing liquidity provisioning, and of course, larger risks in leverage trading environments. So please just be careful. I'm not telling you to buy tokens. Make a plan. Check all these services out and understand them before you use them. All right, cheers. Now let's do some community Q&A, as we always do. I always answer from folks who watch the show, questions that you submit. And I've got some questions from last week's show that I'm going to answer. And I want to remind you that if you have a question that you want answered, leave them in the comments on YouTube. Or if you're watching somewhere else or you're listening on the podcast, you can tweet me at Hashoshi4 as well. So let's go ahead and dive into these questions, which are right here on the computer. So let me go ahead and pull these up. So we've got first one from Ivalo Trekov. What do you think of the theory that the 4-year cycles are gone? And if that's true, what do you think will happen when we get the next halving? So this is talking about the 4-year cycles of Bitcoin. Do we think those are over and the way that they move the markets? I do think that they are maybe not over, but I think they have less effect because of institutional money, the larger market cap overall that we have in the market. But the 4-year cycles are still going to be prevalent in one very important way. The scarcity of Bitcoin and the way that Bitcoin kind of moves the market in general is still going to have an effect. So the next halving and the fact that we're only going to have 3.125 Bitcoin per block released into circulation is going to have an impact. Maybe not as much impact as it has in the past, but it will have an impact. So thank you very much for your question. Hopefully that gives you enough info. Next question is from George Guerrero. When are we getting Hashoshi NFTs on Cardano? Keep up the good work. Thank you. And the short answer is soon. So please hang tight. We've got a couple cool things coming out. We'll have some CNFTs very shortly. Next question is from Gytisbl, Gytisbl. I have no idea how to pronounce that. So when is ETH2 coming out? No one can really tell you for sure when ETH2 is coming out, but I can give you my estimate. I would say that the great merge is going to happen towards the summer of 2022. So we're talking like spring, early summer. That's my guess. Anything can happen. Like things could change on a dime. There's a change in approach. They might even happen faster than that. My estimate, we're going to have the merge where we're going to have the sort of ETH 1.0 smart contract execution environment and, execution environment setup still there, but shifting over to proof of stake in the great merge. I think that's happening in the summer. And then I think this is the last question from Bad Carol. I think despite making a plan for your investments, sticking to your plan, there should be an instance of evaluating and adjusting your plan. The world changes, markets change, the space changes, hype comes and passes. What are your thoughts? How do you make sure you're adapting to the situation around you? Completely agree. I always talk about making a plan. Making a plan is not a one-time process. It's an active process, and you have to continue to adjust and you have to continue to adapt to the market. So completely agree with this statement. Bad, Carol, I really do. The way that I do it is whenever I make a trade, I take stock and I look through my portfolio, particularly if I do a large scale move and I'm moving things around or I'm shifting things to stablecoins, I reevaluate my plan. And I try and do this about once a month. I really look at my portfolio. I look at all the crypto I have, NFTs that I have. I look at the market conditions. I look at what I see kind of trending. And I did this with the metaverse space. I was really heavy in DeFi, and I started to see DeFi slowing down. I moved a lot of things over into the metaverse space and really started to dig deep there and start to understand that a little bit more. And so that was my approach. Everyone's approach is going to be different, but you should be reevaluating your plan very often and adapting to market conditions. You have to stay on top of this so you can make good decisions. That's the main thing that I will suggest. And that is the final question of the day. So I want to thank you so much for watching this and every other episode you might have watched on Crypto Over Coffee. I want to wish you a happy new year, and I hope that you and your family have a wonderful 2022. And as in the short term, I hope you have a fantastic week or rest of your weekend, depending on when you're watching. If you have some time to stick around, I'll leave more crypto videos here on the screen for you to click and for you to watch. Most of all, thank you. And until next time, cheers.